Hello everyone, happy Monday. Welcome back. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona. If you're new here, I'm here every Monday giving an update on what's going on in the Phoenix real estate market. And if you're not, thank you so much for supporting my videos every Monday. I appreciate all of you. Make sure you hit the subscribe button if you haven't already, and we're just gonna jump right in and start talking about this. Also, you may see Cleo there, Zoe's taking a nap over there. We might have some dog appearances, so just bear with me on that. All right, so let's start talking about a national scale of what's been going on lately. So I have this headline here, Powell seen slowing Fed's hikes after 75 basis points next week. So this week, we are going to see what the Fed decides at their meeting. It seems as though it's going to be a 75 basis point hike to the federal funds rate. Again, trying to fight inflation. So that's not going to be a surprise. It's pretty much priced into the markets already. But what this article is saying is that as they move forward with future changes, they may not be quite as aggressive. So they're saying there will be a downshift. Rates may peak at 3.75% in February and then decline. So that is the federal funds rate. That is not directly related to the mortgage interest rate, but all of this activity always affects that as well because it affects the markets. So I have this, let me get my pen here. That would help, right? So I can show you guys what I'm talking about. We have this article here, mortgage rates this week fell across the board in the week ending July 21st, but fixed rates are still more than 2 percentage points higher than at the beginning of the year. So long story short, for mortgage rates from this article, as well as folks that I speak with in the industry, we didn't see too much change last week in rates, and everything that's been going on seems to be kind of priced in. It sounds like since the Fed was so aggressive the last few months on these rate hikes, and we knew they were trying to fight inflation, it sounds like a lot of folks on the mortgage side really got aggressive in pricing in how things were going to change for them, and that's why we saw such a steep increase in rates so quickly. But now that we know where we stand, those mortgage interest rates might kind of hover around where they're at now and may not see big increases. I think we all kind of have this feeling of what's going to happen next because it's been so volatile for the last 3 to 5 months. But it sounds like there is a good chance that we may just kind of hover where we're at and not have as much volatility. So we'll see if that happens, but that's the news on mortgage interest rates. Now, this article here, single family construction is going soft. I thought this was interesting. One of the things that we really experienced in a bad way back in 2008 is that we built too many homes. Specifically in Phoenix, the builders went crazy and we had just this glut of housing inventory. And so we certainly don't want to do that again. And we have been seeing so many issues with demand over the last 2 years, supply chain, labor, all of these things really making it difficult for us to produce the amount of housing units that we needed for the people that live here. And now we're at a point where demand has dropped off and we certainly don't want to get into that housing glut situation again. So this is a national article, but these numbers just came out this week. Builders are growing concerned that demand for new homes is leveling off and they're slowing production out of fear that too many buyers have been priced out of the market. Single family construction in June dropped to its lowest level since April of 2020 when COVID was just beginning. Further, housing permits, a gauge of future construction, also fell, indicating a further decline is ahead in single family construction. The softening of single family construction data should send a strong signal to the Federal Reserve that tighter financial conditions are producing a housing downturn. Price growth will slow significantly this year, but a housing deficit relative to demographic need will persist through this ongoing cyclical downturn. So everything that the Fed's been doing really is impacting housing. Although the inflation numbers are not getting better from what has been reported lately, we have seen a huge effect on the housing market, and that is now spilling over into new construction as well. So it'll be interesting to see how these permits shift as we finish out the rest of the year, if they're going to continue to pull new permits at a higher rate, or if that's going to soften. And specifically for Phoenix, I think it'll be important to track that. So I'll keep you guys updated on those things. Now we're going to jump into the CMI. If you're new here, this is the Cromford Market Index. I get a lot of my information from the Cromford Report, which I'm a subscriber to, and they just analyze all the data in the MLS specifically for Phoenix Metro and give us tons of information that we can share with our clients as realtors. And so the Market Index is their algorithm that really measures supply and demand in our market. And how it works is anywhere between 90 to 110 is considered a normal range. Anything above 110 in terms of the overall market index is considered a seller's market, and anything below 90 is considered a buyer's market. And we're going to talk more about what's going on with all these cities, but for now we're looking at 134.6 this week. I believe last week was 146, so this has gone down. But what's interesting is for the last 2 weeks, I believe it has been, the average monthly change has been 34%. This is the same as last week and the week before, but before that, we were seeing a change of 35%. So for 2 weeks now, it's slowed down a little bit in how it's been trending downwards. I don't know that that is going to, change anything all that much, but we have to keep an eye on it. Now, our demand index, this is what's really killing us right now. It's at 82.6. So again, below 90, that means we're below normal. If we call 100 really kind of our balanced or normal area, then we're about 18% below normal in terms of our demand. And then for supply, we look at that the same way. So we're still undersupplied. We're about 39% below normal, but keep in mind, this number used to be like 22 back in the spring. So we were like in that 80% below normal at that point. So it's really grown. So our supply has grown, our demand has come down, and that is what has brought this overall number down and really softened our market. With that, it has also created longer days on market for homes that are listed and listing price reductions, more listings canceled. So I'm going to talk more about that shortly. This chart down here, this is our CMI for every major city in the Phoenix area. And I have a few things here that are highlighted. So Buckeye is in a buyer's market for sure. Pretty strong buyer's market. Well, maybe not strong, but it is the furthest into a buyer's market out of all of the cities. Then we've got Queen Creek, which is following close behind. They just dropped into a buyer's market, and Maricopa, that is like right about there. So if you are thinking of selling in those cities, keep that in mind. It's going to take quite a while to get your home sold. You have to be patient. You're likely going to have to give concessions, and you're probably not going to get the price that you had hoped for. So keep that in mind and make sure that your agent is very creative with how they're marketing and doing everything they can to get exposure to your home, but just be prepared for it to sit for a bit. Now, these other cities here that I have highlighted, all of those are in a balanced market, and I'm going to read this directly from the Cromford Report. We've got Gilbert, Tempe, Peoria, Chandler, and Surprise are all going to be a balanced market within a few days. So by this point, this was a few days ago actually when they reported it, so I'm pretty sure we're probably in balance for those cities. And they could be buyer's markets by mid-August. The largest market by far, which is Phoenix, looks like it'll be a balanced market before the end of July and a buyer's market before the beginning of September. Glendale and Mesa are just a week or so behind. So pretty much everything from Mesa downward is either a balanced market or a buyer's market. and on the cusp of one or the other. So again, if you're thinking of selling in those cities, you have to keep that in mind. This is changing every day. So what your price of your home might be when it gets listed could shift within the next week and could look a little bit different. Also be prepared to just have a lack of showings, not a ton of activity. And then when you do receive an offer, likely under the list price and asking for concessions. That's the market conditions that we're in right now. And I know that's hard to wrap our minds around because just in April, it was a whole different kind of frenzy, but that's where we stand today. All right, let's move on to a few different data points that I wanted to share that we haven't really looked at in a while on my channel. So this top one here is your median days on market. This is the number of days a home is listed on the market before they accept a contract. Now, looking back to March, it was about 7 days on market pretty consistently. Here we stand today at 20 days on market. That's a really big change. It's more than double what we were used to. And it's been climbing, kind of plateaued here and there since making this change around the April-May timeframe. But now we're sitting at about 20 days on market, and that's the median. And this is for all of Phoenix Metro. So that means that 50% of homes got a contract before 20 days on the market, and 50% of homes got a contract after 20 days on the market. So that really sets your expectation as a seller, but also as a buyer, to know that when a home's been listed for 20 days, it doesn't necessarily mean that there's something wrong with it or that the seller is desperate. That's just kind of become more of our norm now. So I wanted to share that. Another interesting data point that really illustrates how much the market has changed is our number of price changes per week. So in essence, this is the number of listing price reductions. And this is on a weekly basis. So over here in the corner, I have price cut July 17th. So for this previous week, we saw 3752 price cuts on active listings on the market. And now we have about 16,000 active listings on the market, somewhere in there right now. So that means 23% of active listings had a price reduction in the last week. And I don't know the numbers exactly on this graph, but I think it's pretty plain and simple to see where we were at around April in terms of listing price reductions and how common or uncommon those really were to where we're at today, and how prominent that is. So I share all of this information because if you're a buyer, seeing a listing price reduction isn't out of the norm now. And if you're a seller, keep that in mind that it's, normal for you to be doing these list price reductions, and make sure that you are taking the time to do that and not thinking about or not trying to avoid it for the principle of it. It may be necessary depending on which city you're in, how fast the market's changing, and all of that. So I think that's really the biggest thing that we're seeing right now is homes that were listed 3, 4, 5 weeks ago. The price that they were listed at has had to be adjusted as prices have softened here, and we see that a lot in the listing price reductions. So canceled listings is another thing that falls into all of this as well. And this blue line is showing 2022, and you can see this big spike here in terms of number of listings that canceled in the last week. But this has been climbing, since that same time. It was about in mid-April where we started to see some changes in the market. So that has obviously gone up quite a bit. So this is the number of listings that were active on the market and then canceled and are no longer for sale. More than likely because the seller is not getting the number that they want. Maybe they never really had to sell in the first place, tried to catch the peak, realized that they've lost it or missed it, and just not interested in following through with the sale of their home. So this is a really big jump in the last week, and I'm not surprised because I think the market has kind of gotten to the point where we had this rush of new listings on the market with everyone doing what they were doing to try to catch the peak. And then we had some that were successful in getting prices that they wanted and ride that out. And now I think we still have, a small amount of listings on the market that are left over from that, 2 months ago time frame that are starting to get tired of being on the market and maybe never had to sell in the first place. And so I would imagine that we're going to see canceled listings continue to rise over the next month, which is really that fallout from those sellers that didn't need to sell but tried to capture the tail end of a seller's market. And then I think that's going to stop. I think we'll see that flatten out, go back down, not have as many canceled listings. But I think we're just kind of in this flux state where we have a lot of that from a few months ago and it's kind of shaking out. I don't have this highlighted here, but this top line, this was 2014. And that was the last time we were in a balanced market. And so I think these market shifts as we go from seller's market to balance or buyers, wherever we're heading, it really shakes up the expectation of what you know for a seller with a listing on the market. I think it really changes what they expected, and then therefore, you see a lot more canceled listings because they're not getting what they thought. So I thought that was an interesting thing to point out. And finally, I want to talk about the number of closings per month that closed over the listing price. And we're sitting here at a little 32.5%. It still seems really high, but at the peak, this was about 60%. So we're half of that. And also keep in mind, this number is looking at last month because we're looking at closed prices per month. So I would expect that 32 number to be lower next month when we're looking at this month, when we're looking actually at today and what those homes are closing for. But that's another thing to keep in mind. If we look back here, this was pretty consistent, 2015 through 2019, just under 20%, probably around 15%, I think is normal for the number of homes closing over the asking price. And then the last 2 years just got way crazy, not surprised. And now we're coming back down. So I don't know how long it's going to take us to get back to 15%. I'm going to say pretty quickly, and it'll probably be below 15% if we truly are headed towards this balanced buyer's market combination that we're seeing coming our way so quickly. So that's all I have for you guys today. Thank you for joining me. If you have questions, if you want to know your instant home value, check the description. If you want to use my MLS to search for homes, check the description. You want a relocation guide, check the description. I've got a bunch of cool links you can use. And if you have any questions, reach out to me directly. My info's in the description, as well as a link to just set up a time to chat. So hope this was helpful, you guys. Have a great week, and I will be back next week with another market update. I'm Caitlin McKegg with the Desert Dreamers team at HomeSmart.